Hello everybody, welcome back. Let's have a look at Bitcoin and a brief look at the Dixie. We'll start with the Dixie, which has gone into an absolute power extreme move. This is the weekly, and it actually does look like it does want continuation. We've got ourselves a weekly itchy cloud signal generating from basically this week's close. We close like this, which would be hard to deny it, this kind of close. All we need is this cheeky span to remain above the price action. We close like this, we're going to get our next big pump move for the Dixie, which is it sounds extreme, but we are looking to go up to the just the absolute top zone here, just short of 100 on which would be, you know, pre-pandemic levels. You know, this is literally just before the pandemic kicked in. Then the pandemic made this weird formation, whatever you want to call that, and then this. So yeah, it does look like now. It does honestly look like that is the destination for this over the next few weeks. So, you know, for those Dixie dollar holders and those forex traders, hodl those longs, really, is what I would be saying. Now, let's take our eyes off this, because this is kind of a little depressing if you think about the repercussions of what this might mean for everything, stocks, commodities and crypto. Yeah, obviously we're going to see some downside. We're getting that downside now. So we had the push up to I mean, this is January, but we had that push up, this, like I say, it's just an hourly chart. We had that big push up, which was largely to do with that whole speculative Powell Fed nonsense, really, which is him just saying he's going to carry on as normal, which is what we should have expected. You know, and we kind of did expect it, really. And since then we've come back down to earth. Same with traditional markets; they're kind of doing the same thing. The idea, basically, behind what it is that they're doing is they're trying to tackle inflation. I know we speak about it all the time. Trying to tackle inflation, that's number one, but they don't want to cause an enormous shock in the market. There's going to be a balancing act, right? But it's going to be in favour of dealing with inflation. That's the bigger problem. The stock markets will do their thing, and they will almost always recover, and so will crypto. It will recover, whereas, you know, going into a state of massive inflation will cause so many effects throughout economies and populations, and just a whole range of really big problems which you might not recover from quite so easily, you know. So that's fine, and as a result of that strong dollar, which is extremely strong right now, yeah, we're gonna feel the pain. We're gonna feel some pressure. But on the longer term time frames, we just bring it back to a daily, for instance. And now that we've, yeah, you can see on the daily here, the 10 exponentials, the same old place, the same rejection that we always get, and we've been getting since basically we broke down below it. 10 exponential pretty much every time, with the exception of occasional Bollinger Band centers and almost, I suppose, the occasional 50 exponential. So it's still an extreme downtrend, so it does look like it wants to have another stab down at these lows, and that's okay as well, because in order to form the bullish divergence and the RSI breakout, we will need to form lows on price action, and we will get higher lows on the RSI, and eventually we will break out of this descending channel, which I suppose it's a channel. I suppose it's more of a trend line, really. It's not really a channel, I suppose, but we will break out of it, and that will give us just a, you know, maybe a week's worth of upwards price movement as the momentum shifts. So we'll be kind of looking for something like this to form on the next sweep down, and that for Bitcoin's price could be anything from 32. You know, I'd probably say 32 roughly at the lowest, but you know, you have to be you know, you got to be ready for it to come down lower just in case. And if it did come down lower, then it would break this formation, because the chances are the RSI would make a lower low, and it wouldn't be any kind of divergence. And then over time, what we would see would be a breakout like this, and then probably a massive rally. And I'm talking about a massive rally in the form of a rally, not a recovery. Although we have spoken about it on the last video about how in time-wise we think about the major change of formation will be when we get outside of this trend line on price action, and that would be a big deal, because that would suggest, all right, fine, the major area, because this has been a big problem, a huge dump here, about 20-something%, another one here 20-something%, another one here 20-something%. So it's a big deal when we break out, you know, when we come up to touch it. The general expectation would be that once we break out of it, we will get a nice big move, you know, 20-something most likely, maybe even more. Could even form the reversal at that point. It would definitely be a stepping stone over the you know, the river downtrend that we've got at the moment. And again, it's all stepping stones, and at the moment, you know, on the longer term time frames, there's really nothing about the chart that says immediately bullish or anything like that. However, the bullish divergence forming on a daily is a good place to be. So let's just check it on the 4 hours to see what the 4 hourly is saying. 4 hourly is not really, there's nothing to it. Just it does actually look to me like it wants to come down even you know, ever so slightly. And again, if we push down towards 32, I mean that's where my next buy order is, and you know, it's going to be the bottom of the CME gap basically. I've got my bottom area of 32,264. So I will front run that. I can't remember exactly, but it'll be a few $100s above that for my buy order, and we'll see where that takes us. And again, there's nothing bullish about this chart, nothing bullish about the chart, but there are signs that the bullish divergence could form, and that's basically all we got going for us at the moment. So keep our eyes on it. You know, derivatives, small, short little trades. If we do push up back towards that 37,000 zone, that would definitely be a shorting opportunity for me. That's what I'll be looking for today. If we get it at all, we might not get it. We might just go straight down. And if that's the case, that's fine. You know, I don't mind missing out on trades. There's plenty of trades. It's a 24-hour tradable asset here. I mean, you can trade whenever. Like I said, I don't want to rush a trade, but if we were to push up, I would expect a rejection around between 37 and 37,700 or so, thereabouts. Basically the 10 exponential. And if we go to the 4 hourly, I expect we'll see some kind of areas around there where we got rejected from. Actually, that would be the 38,000 would be the top of this cloud. 37,500 would be the green 50 exponential on the 4 hourly, where we can see, you know, over the last 12 hours or so, we have had rejections from there. So there's plenty of opportunity to take shorts here. But for those who are new to all this shorting or just derivatives, your first thing is to just learn it. Don't go shorting because you hear me talking about it. Shorts are one of the best ways to deal with downtrends, obviously, but they are also one of the best ways to lose money. You know, take the GameStop lesson. You know, that can happen to anyone. So long as you've got to make sure your risk management is in play if you're going to be playing around with derivatives. But yeah, I mean, that's it. I mean, it looks like we want to take another stab at the lows, and over the next couple of weeks, we'll see if we can build some of that bullish divergence. Yeah, I might only need 2 tags of bullish divergence, but usually I'd look for 3, and it'll be the third one that basically has that catapult rally, the really significant one. And so that's brewing on the daily. But in order to get that, we do need to make new lows. So I'll be looking for 32,000 to be tagged. To be honest with you, and I hope it does. It means I can short in the in the short term, and I can hopefully get my buy order tagged at these lows, and maybe that will be the low that catapults us out. If it's not, then we still have this 29,000 zone where we found our summer lows, and that was a very big catapult. We had a double bottom and a massive catapult. So I'm not saying it's going to work in the same way. We did speak about how this, you know, between now and basically mid-March is probably going to be sideways and down, unless of course we break out of the descending trend line early, and then we can think about, well, probably more upside than downside at that point. But until then, feel free to short if you are confident and, you know, able to manage your risk appropriately. Otherwise, just let's incrementally look at these levels: 32, 28 to 29. And if we break down below there, then this area is going to be like a major accumulation zone for what I would expect whales to come in thick and fast, if they're not already, to be honest. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.